Hello everyone, here is BUS 10250 Financial Accounting Team 6 presentation.
Hello everyone, here is TK7 Tutorial Class Team 6 presentation. Next is the introduction of our team members.
Hello everyone, I am TK7 and today we are going to talk about bank reconciliation statement and accounting concept and standard, and hope you guys can able to understand our presentation.
Hello everyone, my name is Peng Yilu. What problem I want to show you is AB for the first problem, and I hope I have explained this to you. Thank you.
Hello, my name is Lin Xinyu and my part is to describe the income statement of the second question.
Hello everyone, my name is Xu Jiahao, which is from Group 3.
Hello everyone, I am Tan Pui Tai and I will talk about chapter summary here. Let us highlight some of the important concepts of chapter 24, bank reconciliation statement, which mean the following items were entered in the bank column of the cash book when paid or received but have not yet been processed by the bank. Number 1, arithmetic and posting error. For example, human error is the cash in the cash book, so we need to rectify the wrong account in cash book. Number 2, omission. For example, dishonest check is referred to the check which received from a debit rejected by the bank, or the check which issued to a creditor rejected by the bank. Number 3, credit transfer, which is a direct credit result in money from third party being transferred into firm's bank account automatically. Number 4, lodgement not yet credit. It refers to an item received by the firms that has not yet appeared on the bank statement. In the firm's book, items are recorded when they are received and not when they are credited by the bank. However, they will not appear on the bank statement until they are disposed and cashed. Number 5, unpresent check. It refers to an item issued by the firms that has not yet appeared on the bank statement. In the firm's book, items are recorded when they are issued and not when they are present for payment. However, they will not appear on the bank statement until they are present and cashed. Next is chapter 7. We learn about accounting concept and standard. First one, historical cost. It requires that assets are normally shown at cost price. Number 2, money measurement. It requires that accounting information is traditionally only concerned with facts. Number 3, business and entity. It is implied that the effects of a business are to be treated as being quite separate from the non-business activity of its owner. Number 4, due aspect. It states that there are two aspects of accounting, one represented by the asset of the business and the other by the claims against them. Number 5, time interval. It's required that an entity will prepare financial statement at regular interval during the year. Number 6, accrual. It states that the effects of transactions are recognized when they are occurred and not when money is paid or received. Number 7, going concern concept. Assume that the business will continue to operate for at least 12 months after the end of the reporting period. And number 8 is Materiality. Whether an item is material or not depends on the size of the business and is a matter of judgment. And number 6, prudent. Prudent is very often accountants have to use their judgment to decide which figures to take for an item.
Hello everyone, my name is Peng Yilu. Then Betty and I are going to talk about the question 1. X Limited honored the following machines as at 1st January 2000 X5 year. The first machine is Z104. It cost 450,000 in 1st August 2000 X3 year. The Z105, it cost 280,000 in 1st April 200 X4 year. The company depreciates machine at 20% per annum using straight-line method. It's a company's policy to provide depreciation on a monthly basis. The company only holds one machine's accounts in the general ledger for all machines purchased. The following events occurred during the year ended 31 December 2000 X5 year. The company purchased a new machine Z106 for 587,000. On 1st July 2000 X5 year, machine Z106 was to be depreciated in the same way as Z104 and Z105. Z105 was sold on 1st May 2000 X5 for 200,000. Now I will give you an explanation about question 1. Because we need use straight-line method, so the depreciation value is the same every year. Depreciation of Z104 in 31 December 2000 X3 year equal to 450,000 times 0.2, then divided by 12, then times 5 is 375,000. 5 for August, September, October, November, and December. Because 2000 X3 year to 2000 X4 year is a whole year, so in 31 December 2000 X4 year equal to 450,000 times 0.2 equal to 90,000. In 1st May 2000 X5 year equal to 450,000 times 0.2, then divided by 12, then times 4 equal to 30,000. 4 for January, February, March, and April. Then depreciation of Z105 in 31 December 2000 X4 years equal to 280,000 times 0.2, then divided by 12, then times 9 equal to 42,000. 9 for April to December. In 31 December 2000 X5 year equal to 280,000 times 0.2 equal to 56,000. The last depreciation of Z106 in 31 December 2000 X5 year equal to 587,000 times 0.2, then divided by 12, then times 6 equal to 58,700. Question A. Draw up the machine account and the provision for depreciation account on machine for X Limited for the years 2000 X3, 2000 X4, and 2000 X5. We write down the machine accounts. Its title is very important. First, we should write down the 1st August 2000 X3. Cash, it means machine purchase. It cost 450,000. So on the right, we should write down the 450,000 too on 31st December 2000 X3. to balance carry down. On 1st January 2000 X4 year, we should write down the 450,000 to balance brought forward. And on 1st April, we bought a machine Z105. It costs 280,000. So we add them up, it equal to 730,000. So on the right, we should write down the 730,000 on 31st December to balance carry down. On 1st January 2000 X5 year, we should write down the 730,000 to balance brought forward. And we bought a machine Z106 on 1st July 2000 X5 year, so we write down the 587,000. But we also sold out the Z104 for 200,000, so we write down 200,000 on the right. And the provision for depreciation of Z104 is $157,500. So first May on 2000 X5 year, we profit or loss, it cost 450,000 minus 200,000 and minus 157,500. It's equal to 92,500. So we should write down 1,193,750 on 31st December 2000 X5 year to balance carry down. This is provision for depreciation on machine account. First, we need to write down the depreciation expenses about 37,500 on the right. So we also need to write it on the left to balance carry down. On 1st January 2000 X4 year, we need to write down the 37,500 to balance brought forward. And on 31st December 2000 X4 year, we need to write down depreciation expenses about 132,000. So we can add them up, it equal to 169,500 about balance carry down. On 1st January 2000 X5 years, we need to write down the 169,500 to balance brought forward. And on 31st December, we need to write down depreciation expenses about 144,700. And we know from the first page that the account current equal to 157,500. So on 31st December 2000 X5 years, balance carry down is equal to 156,700. This is question B. What is profit or loss on disposal on machine Z104? We should calculate the profit or loss on disposal. First, we should write down the 1st August 2000 X3 year. We bought a machine worth 450,000. Then we should minus the depreciation on 31st December 2000 X3 year. It costs 37,500. Then we balanced at 440,500. Then we should go on to minus the depreciation on 31st December 2000 X4 year. It cost 90,000. Then we balanced at 322,500. Then we should go on to minus depreciation. On 1st May 2005 year, it cost 30,000. Then we balanced at 292,500 because we sold the machine Z104 for 200,000, so we lost on sale 92,500. Thank you.
Question C. Show the extract of X Limited balance sheets for the years ended 31 December 2000, X3, 2000, X4, and 2000, X5. We already know all the machine depreciation in question B, so we just need to use the cost minus depreciation to get the WDV here. But I just want to remind the two special machinery depreciation here. It is 2000 X4 machinery EZ104 here, because you need to use two values to calculate. It is 37,500 plus 90,000. So after calculate, you can get the 12,700 and 500. And the second point I just want to remind is 2000 and 2000 X5 machinery is at 105. This depreciation also need to use two values to calculate. It is 56,000 plus 42,000. So after calculate, you can know it is 9,000 and 98,000.
Hello everyone, I'm Lin Xinyu, and the third part is coming. Betty and I are going to talk about the question 2. The title shows us a trial balance, and we should to finish an income statement and a balance sheet. The right-hand side is the formula about the income statement. Gross profit equal to net sales, and the sales is here, but we should minus written inwards to get the net sales. And the cost of goods sold equal to opening inventory. Opening inventory is here, we get it, and the minus net purchases is here, and the carriage inward is belong to purchases. So we should use purchases plus carriage inwards and minus written outwards to get the net purchases. And the closing inventory is not here, so we should find it on the additional information. And we should add the discount received on the income statement. In order to get the net profit, we should use gross profit minus expenses. So we should find all the expenses and use gross profit to minus it. And the others is about capital, liabilities, and the capital. We should use it on the balance sheet, not the income statement. This page is the additional information, and the first is the closing stock, and the second is the insurance related to the next year. So this is a prepaid expenses, and it belongs to current asset. And the third one is depreciation. We should use the cost of office furniture times 10% to get this year's depreciation 2,000. And then we should use this year's debitors 200,000 minus $6,000 for the written off, and times 5% minus last year's provision for debt debit, and we can know this year's has increased $4,700 compared with last year's. The last one is the accrued. So this is liabilities. This is the income statement, and don't to forget the title of income statement is very important. In order to get the gross profit, we should use the net sales minus cost of goods sold and plus discount received to get gross profit. So we use sales less return inverse to get the net sales, and minus cost of goods sold and add the discount received get the gross profit $579,000. And we should minus the expenses. Carriage outwards is included in expenses. And insurance, don't you forget minus prepaid insurance, because prepaid means next year's expenditure for insurance, not this year. So we should minus it. And office expenses, we should add accrued for office expenses, because this expenditure is happened in this year, not last year. So we should add it. And salaries is the same. Bad debits, we should use the 70,600 plus $6,000. And provision for double debit. This compare with last year's. This year is increased $4,700. And the depreciation $5,000. We calculate on the last page. And don't forget the discount allowed. So we can get the answer. We can add it up to get the total expenses, and we should use gross profit minus total expenses and get the net profit 79,700. That's all my part. Thank you for your listening.
So let's see balance sheet of Sem 1 as at 31 March 2008. The first item is non-current asset. Non-current asset, it should be the total office furniture here, but maybe I forget put in, sorry. So the cost it is 50,000 and depreciation is 25,000. And after calculate, you can get the answer if 25,000 too, because in the additional information number 3, we can know that depreciation on office furniture at 10%. So 50,000 times 10%, it is 5,000. Then we need to plus 20,000. So the depreciation of office furniture is 25,000. And then the current asset, the debitor, it is 200,000 minus 6,000, because in additional information number 4, 60,000 6,000 was further written off, so we know that 6,000 we cannot get back, so we need to minus 6,000 here. And then provision for doubtful debt is the same way to calculate, but we need to time 5% here, because in additional information number 5, we can know that the previous the provision for bad and doubtful debt is to be maintained at a level of 5%. So you need to time 5%, so you can get the answer is 9,700. So we can know the total asset is 37,000 9300, and we know the formula asset equal capital plus liability, so the capital plus liability also equal 37,9300.
Hello everyone, my name is Xu Jiahao, which from Group 3. Today we prepare 3 questions for you. And the first one, the bank statement balance is $4,500 and a service charge of $15, the interest earned of $5, and no sufficient fund check for $300. The deposit in transit total $1,100, and the outstanding checks are $516. The bookkeeper record as $152 and a check of $125 in payment of an account payable. This created a book error of $27. Of course, positive amount to correct the error. So the QA is what is the adjusted bank balance, and the QB is what was the book balance of cash before the reconciliation. If we want to solve this question, the first thing we should know the deposit record by business, but not by the bank. For example, deposit in transit. And the second thing is we should know the charges record by the business, but not by the bank. Of course, outstanding checks. So we end the deposit in transit $1,100, then next outstanding checks $516. So we get the answer is $5,014. For question 2, because the adjusted cash book and the bank balance are the same, so we can determine the answer by working backward from the adjusted balance. The balance of a bank, what we get before was $5,014. We end the bank service charge and NSF check, then we less interest earned and book error. So we get a cash book balance is 5,323. For question 2, what may choose the bank balance and the cash book balance to be different? This is a simple question. I think you can get it many answers. So here we just example 3. The first one, bank interest charged and the bank charges are still not loaned to a company until it receives a bank statement. Example 2. Customer may pay their account by direct transfer from their bank account or by paying cash directly into the business bank account. Question 3. A business may take a day or two to deposit some checks that it has already earned in the cash book. So besides this, we have the other example. And question 3. Assume that a computer having a market value of $400 is purchased from a distressed seller for $219. The amount recorded as the cost of the computer is $219. So here is a question. If you are an accountant, would you record $219 or $400 on your company financial statement and accounting records? Both we can know the answer is 219 because at the account we should know what is historicals, and it required that assets are normally shown at cost price. And the cost price is basis for the valuation of the asset, and we know we evaluate the asset, the computer is 219, so this is why we should record the $219 in this question. So thank you all of you to listen this presentation. Thank you.
That's the end of our presentation. Thank you.